Hey gang, Matt from Easy Breakouts, about to start another current market trend review, but before I do, just wanted to mention that if you find this video helpful, be sure to click on that subscribe button down below. Also, you can view additional videos by visiting our YouTube channel. Alright, let's hop into our analysis. So folks, as we take a look at the action from Monday, we can see across the board it was a strong day, but the standout performer here was both the NASDAQ and the Russell. Now the NASDAQ was recovering off of some lows. Russell here is looking very, very strong, continuing some of the leadership we've seen since the post-election rally. We saw the crude testing up near the 52s before backing off later in the day. Gold's looking weak, actually posted a new year-and-a-half low here, and the bonds here just hanging out on the lows. We'll see all of this on the charts. But as always, we're going to hop over to the S&P 500s on the daily charts. So folks, as we've been mentioning here on the S&P 5s, we had a little bit of a pullback after breaking this ascending trend line. All right. And I'm going to zoom in here for just 1 second as we go into the 15. Actually, let's zoom it out to the 60-minute charts. There we go. So here's that little bit of a trend line break that we were talking about. And once we broke that, what was it, earlier last week, Monday sometime, we were saying look to the 2195s as potential support. That was kind of like an early short-term intermediate support, but really the 2180s were the critical levels that we needed for this rally to hold. Folks, we came in here, we got nice support at the 2190s. So here's those 2195s I was looking for here. We actually gapped above it. We had a nice little pop today. We managed to close about mid-range trade on the day. But folks, so far looking very nice. If we kind of zoom out just a little bit, you can kind of see here, here's those 2180s I was looking at. I was originally looking for the 2195s to hold. Now that we're sitting above it, here's kind of what I'm seeing. I think you've just got a big old range here from the 2115s down to the 21, or I should say the 2215s down to the 2180s. And even if you look at this setup here, it seems to suggest slightly a little bit of a bullish setup. Some of you might be able to see just the slightest bit of like a cup and handle forming here over just a 2 or 3 day period. So we'd be looking for any sort of trade above these like 2210s, and that would be an attempt, I think, at all-time a fresh series of all-time highs here up above the 2215s. As we take a look at the Nasdaq here, the NASDAQ did manage to rally above the 50-day average. So we were talking about how we were just hanging down a few points below that 50-day average over the last couple of days. We were seeing some relative weakness. One of the things that was a little bit troublesome to me is how we rallied above these 5340s. We broke out of it. And then, 5 days later, we just caved in right below it. So, folks, I think the place for us to take out here on the NASDAQ is above those 5340s, which would be right around these levels, just going across the top here. So we've still got a little bit of room to work off here before we can get above it, but I think we got to get above that area, otherwise it starts to feel like a failed breakout. Anytime you break out into new high ground and then you immediately snap down below that prior resistance area, it does tend to feel like a little bit of a failed breakout. So we'll be looking for trades above those 5350s. On the NASDAQ, again, we've been seeing a lot of the bigger cap techs, the Facebooks, the Amazons, the Googles, or the Alphabets rather, kind of lagging behind some of their smaller cap brethren. And in fact, even though we've seen some of the NASDAQ stocks looking weak, let's take a look in on the smaller cap Russell. Look at that really nice formation here. And what do you see here, folks? You see a nice high handle that's forming. And we've been talking about this, how there's been a lot of high handles that we've been seeing on individual stocks. These are the setups that we've been taking. We've been actually taking some really nice trades on some of these stocks off of high handle setups. In fact, you kind of see that here a little bit on the S&P 500s too, right? You kind of broke out of this little bit of a double bottom here, and then you formed a high handle on the S&P. So even some of these larger, bigger cap names are forming these high handles. And in fact, the Dow Jones broke out of a high handle about a week and a half ago right here. So across the board, folks, when you see a strong rally like we've seen over the last 3-4 weeks, you're going to inevitably run into some high handle setups. I mean, markets can't just go straight up. They'll go up, they'll balance out, digest sideways, and that's where you'll look for those setups coming out of those balances, out of those range-bound trades. As we move over to the external markets here, taking a look at the bonds, one of the things I was mentioning about the bonds all day today is that they've been weak ever since the post-election, starting to balance out here. And if we take a look from a zoomed out chart, we can see that the area that we're starting to kind of start to settle into or find a little bit of support does seem to coincide or line up with with an area of congestion going back to 2013 and 14. So this might be a place for the bonds to just go sideways for a little bit and decide if it wants to have a snapback rally or if there's further selling to come. Again, it's, markets tend not to move in one direction. They tend to go directional trade for a little bit, either up or down. Then they go sideways, digest, balance out, go into a little bit of a range bound trade before making their next movement. Right now, when I look at the bond charts here, we're kind of entering into an area of congestion. So it wouldn't surprise me for the trade or the directional movement of the bonds to start slowing in this area, especially since there's a lot of prior trade going back a couple of years right in this area. As we look at the crude, very different story though. I tend to find that the crude might be starting to try and break out into directional trade. We had our first attempt up and over the 52 evens today. We got rejected initially, but folks, we're still right there, right at the 51s. In fact, looking like a little bit of like a head and shoulders pattern, which is somewhat of a bottoming process. Trade above 52 would suggest higher prices here on the crude. And you can just see here on the intraday charts how we tried to rally above the 52, got rejected, came right back into these 51 evens. And then finally here, the gold. The gold here just hit a new low at the 1158, so the gold's been under big time pressure as we've been mentioning, just breaking down from support levels. And folks, one of the things I've been mentioning over the last few videos here is unless the gold can get above the 1200s, this starts to look kind of dire for the gold. In fact, if you zoom out on a weekly chart, you can see how it was pretty quick trade up and through the 1050s up to the 1200s the first go round, which would suggest a fairly decently quick trade back down if we're not able to get the support here. So just watch the gold here. It looks like maybe over the next 6, 7, 8 weeks, that's kind of how long it took it to rally up here. You might see gold just fading down here if no support, no buyers come in, and especially if we can't get back above those 1200 evens. Now, folks, as we move back to the equities, or I should say the individual equities, not the market indices, one of the things we mentioned were how the markets have been kind of sideways, range bound, especially apparent here in the S&P 500s, but that hasn't prevented some of the leading stocks with great relative strength from making some nice gains. Case in point here, look at the EXP. Okay, we took this a couple of days ago, and look at this over the last, let's put it up on a 15-minute chart here. You can just see how we took it right over the 96, mid 96s here. It's been a nice trade, and actually it's been hanging out near these highs, near the 101s. You can kind of see how it's formed a little bit of resistance right here at these 101s. It actually almost feels like a break above the 101s would suggest another leg higher on the EXP. But folks, this is an example of relative strength. When you overlay this with the market, and I'm going to do that in just a second, what you'll actually see is the market during this period falls apart and then has a nice rally today. So I'm going to show you that here, S&P 5s, right? The market kind of just fades, and then has a nice little pop. Well, the stocks that we want to be involved with are the stocks that are showing relative strength, that even in the midst of a sell-off or a pullback in the market can still rally. And that's why we're still looking for high relative strength names breaking out on volume from recognizable chart patterns, because those are the ones that tend to suggest they're under heavy accumulation by these major institutions. Here's another name that we took a position in, and that is the CLCD. Now, we took this just a few days ago right over these 37 evens, and it doesn't look like a whole lot here, but it's trading up at the 40s. That's a $3 move on a $37 stock. Folks, that's about a 7.5%, 8% move in just a day and a half. Okay, and the truth remains that look at this stock. It's trading up, even down in this region where we took the trade. It has great relative strength. It's trading up near all-time highs, and these are the stocks that we're looking for in the midst of a pullback. Remember what I had mentioned a few videos ago, that even though the market might be pulling back on us, that actually makes it a little bit easier for us as traders to spot opportunities, because the stocks with relative strength will be green on the day or positive on the day while the market's pulling back. That allows us to see relative strength a little bit more easily. So folks, that's the kind of names you're going to be looking for. Continue watching stocks that are forming bigger chart patterns on daily or weekly time frames, that have great relative strength, that have resisted this pullback in the market over the last 3 or 4 days. And here's the deal. When you look at the S&Ps here, okay, when you look at the S&Ps on an intraday chart, If the markets have pulled back in here and have now kind of popped back up within striking distance of breaking out to all-time highs, if your stock has stayed near their prior highs this entire period, chances are when the markets break to new all-time highs, your stock is going to be right there ready to run. You got to be there waiting for the volume to kick in and for your price levels to be broken out to the upside. So again, folks, game plan always has been, always will be, looking for the best relative strength stocks, breaking out of recognizable chart patterns with ideally some volume, and that's what we're going to be looking for in the trading week ahead. But other than that, folks, wishing everyone a great trading day ahead, and join us for our next market trend review. Hey, by the way, if you haven't done so already and you're liking the analysis, go ahead and hit that subscribe button down below. And as a reminder, you can also view additional videos by visiting our YouTube channel. Or if you'd like to find out more about Easy Breakouts, go ahead and click that Show More right above the comments section to find out more about Easy Breakouts. But other than that, have a great trading day ahead, and may the trend be with you. Take care, everyone.